Hello everyone, welcome to the market opening bell on Wednesday, March 19. The Nasdaq Golden Dragon Index rose 4% on Monday, driving Hong Kong stocks to open higher on Tuesday, reaching a more than 3-year high. The Hang Seng Index opened up 533 points, hovered near its peak and rose 599 points late in the session to hit 24,745. It closed up 595 points or 2.5% at 24,740, marking three consecutive days of gains, a cumulative increase of 1,277 points or 5.4%. The X-share index rose 249 points or 2.8% to 9,177, while the Hang Seng Tech Index gained 232 points or 4% to 6,105. The total market turnover for the day was 285.9 billion Hong Kong dollars. Mainland Chinese markets saw modest gains, with the Shanghai Composite Index closing at 3,429, up 3 points or 0.1%, and the Shenzhen Component Index closing at 11,014, up 57 points or 0.5%. The combined turnover of the two markets was 1.5196 trillion yuan, down 53.3 billion yuan from the previous day. The renminbi US dollar midpoint rate was set at 71.1733, down 45 basis points from the previous day's 71.688. Xiaomi Group released its full year results for 2024 with total revenue and adjusted net profit hitting record highs of 365.9 billion yuan and 27.2 billion yuan respectively, up 35% and 41.3% year over year, both exceeding expectations. The innovative business segment, including smart electric vehicles, recorded total revenue of 32.8 billion yuan with a gross margin of 18.5%. Of this, smart EV revenue was 32.1 billion yuan, while other related business contributed 700 million yuan. The segment reported an adjusted net loss of 6.2 billion yuan. Last year, the Xiaomi SU7 series achieved deliveries of 136,854 units, implying an average loss of 45,300 yuan per vehicle sold. For smartphone and AIoT segment, saw revenue rise 22.9% year-over-year to 333.2 billion yuan, with a stable gross margin of 21.2% compared to the previous year. The average selling price of smartphones for the year increased 5.2% year-over-year to 1,138.2 yuan, a historical high. Smartphone business revenue grew 21.8% year-over-year to 191.8 billion yuan with a gross margin of 12.6%. Global smartphone shipments reached 168.5 million units, up 15.7% year-over-year. The IoT and lifestyle consumer product segment saw revenue increase 30% year-over-year to 104.1 billion yuan, with its gross margin rising 3.9 percentage points to 20.3%. Internet services revenue and gross margin also hit record highs, with revenue up 13.3% year-over-year to 34.1 billion yuan and a gross margin increase of 2.5 percentage points to 76.6%. Xiaomi Group President Lu Weibing stated during the earnings call that the competitive landscape of China's smartphone market is relatively stable, with major players holding similar market shares. However, he expects differentiation over the next 3 to 5 years, with leading brands growing stronger. Xiaomi aims to increase its market share by 1 percentage point annually. The company will allocate about one-fourth of its total R&D budget, approximately 7 to 8 billion yuan, to AI. In the long term, AI operating systems and chips are identified as Xiaomi's core technologies. In the short term, Xiaomi will focus on building AI infrastructure, developing large language models, multimodal AI models, and application scenarios such as Super Xiao I, smart cockpits, and autonomous driving, while also leveraging AI internally for efficiency gains. Regarding its automotive business, Xiaomi Auto remains in a high investment phase, with no firm internal timeline for profitability. Full efforts will be made to improve its financial performance. Tencent will announce its Q4 and full year 2024 results today. Q4 revenues is expected to reach approximately 174 billion yuan, up 9 to 10% year over year, driven by pre-spring festival consumption boosting advertising and gaming revenue. Domestic gaming revenue for Q4 is projected to grow 12 to 15% to 38 to 40 billion yuan, supported by stable performances from Honor of Kings and Peacekeeper Elite, as well as new titles like Delta Force. International gaming revenue is expected to rise 8 to 10% to 15 to 16 billion yuan. Social network revenues is anticipated to increase 5 to 7%. Advertising revenue is forecasted at around 30 billion yuan, up 10 to 12%, benefiting from enhanced monetization of WeChat video accounts and mini programs. Fintech and enterprise services revenue is expected to reach about 55 billion yuan, up 8 to 10%. While payment business growth slows due to regulatory pressures, cloud services may see over 15% growth, driven by AI demand. Full year revenues is projected at approximately 640 billion yuan, up 10.5% year over year, slower than 2023's 36% growth, reflecting market maturity and intensified competition. Q4 net profit is expected to be around 45 billion yuan, up 10 to 12% year over year, lower than Q3's 54.4 billion yuan, boosted by one-time investment gains. Full year net profit is forecasted at about 165 billion yuan, up 12 to 15%. Markets will focus on Tencent's management commentary regarding its AI strategy and capital expenditure outlook. Other companies announcing results today include Power Assets Holdings, CK Infrastructure, Hong Kong and China Gas, Ping An Insurance, Zhong'an Online, Intersports, and Kingsoft. Investors are concerned about the U.S. economic outlook as well as developments in Gaza and the Russia-Ukraine conflict, leading to a decline in U.S. stocks on Tuesday. The Dow Jones Industrial Average fell 260 points or 0.6% for the day, closing at 41,581. The Nasdaq dropped 304 points or 1.7%, closing at 17,504, and the S&P 500 declined 60 points or 1.1%, closing at 5,614. The Magnificent Seven Tech Giants Index fell by approximately 2.1%. Tesla closed down 5.3% as market expectations for the pricing of its autonomous driving features weakened, and the company faces pressure from overseas competitors, particularly in China. Meta fell 3.7%. Nvidia announced the launch of its Blackwell Ultra and Rubin AI chips on the first day of its GTC 2025 event, yet its stock still declined 3.4%. Alphabet dropped 2.2%, though after hours, the company announced a 32 billion US dollar all-cash acquisition of cloud security startup Wits, reportedly its largest deal ever. Amazon fell 1.5%, Microsoft declined 1.3%, and Apple slipped 0.6%. The Nasdaq Golden Dragon Index, reflecting Chinese concept stocks, closed down 0.18%, with Alibaba dropping 3.3%. The Hang Seng Index night futures closed at 24,716, down 79 points, trading 25 points below the Hang Seng daytime close. On the economic data front, U.S. industrial production in February rose 0.7% month over month, marking its third consecutive month of growth and exceeding market expectations of 0.2%. Prior figures for January and December were revised downward to 0.3% and 1.1% respectively. Manufacturing output, which accounts for 78% of total industrial production, increased 0.9%, the highest in a year, far surpassing the market's expected 0.3% growth, driven by an 8.5% surge in the motor vehicles and parts index. Additionally, U.S. import prices in February rose 0.4% month over month, matching January's pace and defying markets' expectations of a 0.1% decline. Export prices edged up 0.1% in February, following a 1.3% increase in January, outperforming market forecasts of a 0.2% drop. In the housing market, U.S. building permits in February fell 1.2% with the seasonally adjusted annualized rate of 1.456 million, slightly above the market's 1.45 million estimate, marking the largest decline in 5 months. However, new housing starts in February unexpectedly surged 11.2% month over month, reaching a seasonally adjusted annualized rate of 1.501 million, significantly higher than January's downwardly revised 1.35 million and the market's expected 1.38 million. This rebound follows a sharp 11.5% drop the previous month, attributed to severe blizzards and cold temperatures disrupting construction activity. Amid escalating conflicts in the Middle East and US President Trump's continued push for tariff plans, investors turn to gold as a safe haven asset, pushing gold prices to a record high on Tuesday. Spot gold peaked at a new high of 3,038.3 US dollar per ounce. Markets are also focused on upcoming meetings of the Federal Reserve and other central banks, with expectations that the Fed will resume easing policies in June, further supporting gold prices. Our stock pick today is Midea Group, stock code 300. Midea Group has transformed from a traditional home appliance manufacturer into a provider of smart home solutions and commercial and industrial solutions. Through its smart home business, it offers consumers a variety of household appliances, while its commercial industrial solutions provide enterprise clients with diverse offerings such as home appliance compressors and motors, commercial air conditioning, industrial robots, and supply chain services. Between 2021 and 2023, the revenue from the commercial and industrial solutions segment achieved a compound annual growth rate of 15.4%, with its revenue contribution increasing from 21.4% in 2021 to 26.2% in 2023. Looking ahead, the group believes that commercial and industrial solutions will become a key growth engine. The group's robotics and automation business is operated by KUKA Group, headquartered in Germany. KUKA is one of the world's top 4 industrial robot manufacturers with over 120 years of history. It provides one-stop automation solutions, including industrial robots, processing units, and fully automated systems. And through its subsidiary Swiss-Lock, it offers logistics automation systems. These solutions serve end markets such as automotive, electronics, metal and plastics, consumer goods retail, e-commerce, and healthcare. Since Midea Group acquired KUKA in 2017, its China business has grown rapidly, making KUKA China a significant contributor to the overall growth of KUKA Group. The revenue contribution of KUKA China to KUKA Group's total business rose from 17.3% in 2021 to 19.6% in 2023. Recently, Midea Group unveiled its first humanoid robot. This robot is reportedly capable of shaking hands, making heart gestures, dancing, understanding voice commands, and performing corresponding actions based on those instructions. Midea revealed that it has established a humanoid robot innovation center to focus on humanoid robot development. Over the past period, Midea's technical team has concentrated on researching core components of humanoid robots such as reducers, motors, sensors, and controllers, and has made significant progress. Prototype samples of these robot components have been developed and are currently being tested on internal machines. In addition to core components, Midea is also working on the development of complete humanoid robots and the integration of robotics into home appliances. Recommended buy price 77 Hong Kong dollars, target price $87, stop loss $73. I personally do not hold the aforementioned stock.